Bill O'Neill was always about, he was more worried about the sin of omission. So people are still wondering about that. That's why we could try to tighten up the criteria on follow through dates, but there would be times when you'd miss out on big runs in doing so. So that's what you have to consider. Just with the follow throughs is that, yeah, there were reasons why we were nervous. I know you went over that before, but just we'd much rather make sure we get all the follow throughs, all the real rallies, rather than trying to weed out all of them. And just note the caveats.
To that end, there was a lot of people asking about follow through days. Do they have to be above average volume? Because they were reading, pointing out in the 3rd edition, he says, Bill O'Neill writes that the volume should be above average, and I mean it should show power, right? It should show power. It should be above average, and it is always looking at the volume being heavier than the day before. So in the 4th edition, he changed it to should be above average in most cases. So I want to just make it clear that Bill, what he told us internally was the biggest thing was that the volume had to be heavier than the day before. There were some cases where the volume wasn't above average, and Bill would forgive that because of exactly what you just said, Ed. He wanted to make sure that he didn't miss something because maybe there was very heavy volume on the downside, and that was a capitulation, right? They just finally, everyone threw in the towel, and that kind of made it so that the market could go up higher. And so you could have these situations where the volume was heavier than the day before, going in the right direction, but it just couldn't overcome that hurdle of the average. So, I don't want people to think that we were throwing Bill's rules out. This is the way he ran things when he was in the office every day and when he was putting his input into the big picture and the calls that we were making. And I just wanted to, if you can go real quickly, I want to show an example of this because one of my favorite rallies, because I just felt like I handled this rally pretty well, was if you go to April of 2012.
Just going to go real quick on the Nasdaq. Say this. I'm just so here.
Yeah, that's perfect. And so if you go to the December 20th follow through day, now keep in mind there were all these global recession fears. So this was a case where and this could be something that repeats here, where we had these lows that we made in August and October, and it took a lot of slopping around before anything really happened. And when it finally did, it was December 20th. It was like a 17th day follow through day, and you'll notice that yes, the volume was heavier than the day before, but it was below average. And this is a super powerful rally. Short. You only had really a few months, but you had some really strong stocks in there. Buffalo Wild Wings, Michael Kors at that time, despite the fact that it was doing a secondary every other day, it seemed like, that was just, raging. Invisense was one of my big winners, that they made the gyroscopes for the Wii gaming system. So, if you had said, oh, well, gosh, I didn't get above average volume on that day, so forget it. Well, then when was your next, valid follow through day? You were going to be a little bit later. So, and there's other examples of this. Another example was, May 30th, 2000, which again, a lot of people say, well, gosh, didn't the market top in March of 2000? Well, on May 30th of 2000, which actually it's interesting because the volume was pretty low that day. And the only reason why it was probably higher than the day before was because it was, before a Memorial Day holiday.
Yeah.
So you had that May 30th, and there was a big rotation, right? You had a lot of people were looking at the biotechs. You had the Human Genome Project going on at this time, getting people were really excited. And then I can't remember what the news was, but it was on April 14th. I remember the picture of what was it, Bill Clinton and Tony Blair announcing something on biotechs that just threw things for a loop. But even though that rally, if you look at the market index, it doesn't look like it did much. You had Keithley Instruments, SDLI, JDSU, Corning, a big move in the fiber optics, that lasted until around September. And off of that follow through day, I can tell you, Bill was buying. He was buying on that day, even though it was below average volume, and there were a lot of setups and things were working. And he got on margin, by the time he was done. But I also saw him get very heavily invested in Corning and get out of that thing within, 3 days, because once it started looking funny to him, he just said, okay, I'm taking my profits and I'm out.
And I can't remember, there was a follow through day, I think on Black Friday. One time.
Yeah, there was one where,
I do remember that.
yeah,
And that worked, and I sat out because, oh, it's just Black Friday. It's like, come on. It's like, there was no volume on Wednesday. Okay. Somehow it was a little higher on Friday, but really, I mean, and it was weird because there wasn't higher
A
volume.
half a day
half a day during that day, but it was used at, that was one where you certainly could have said, hey, volume was not higher than the prior session, but that one we did it and that one worked. And I sat out.
And Bill came down and he said, okay, guys, look, if you extrapolated today's volume out, and said, what would have happened if it was a full day? I think we can make the argument that volume would have been higher. And so he wanted to call it a follow through day. So even though he wrote, should for the above average and always for the volume being heavier, when he was faced with that decision, he changed his mind. He said, you know what, I want to call this a follow through day because I think the volume would have been if we had a full day. I don't want to sit out just because it was a half day.
Gotcha. Yes.
And what we're doing is we're not predicting the market. It's an interpretation of the market. And then so we look at what the market is doing and then we act accordingly.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.